Well, we already assumed that we would have divided government, right? I mean, so the election results, I think, have come in as sort of a little bit of a surprise with the Democrats outperforming expectations, but it does look like the Republicans are still headed towards controlling the House of Representatives. That was actually what we assumed in our base case for our economic projections. So this probably won't have a material impact on our outlook, for example, but it is interesting to see the political results because, people have been talking about a big Republican wave, and that does not appear to have materialized.
Yeah, so far it's looking more like a ripple, but if these results hold, of course. Just one thing before we talk about your economic projections. When it comes to regulation, people say that because of this potential gridlock, there'll be less scope for the Dems to pass through some regulatory measures, particularly as it pertains to big tech. Is that sort of a tailwind in your view?
I'm not sure how big a tailwind it is. I mean, I think the Democrats might have already have had some problems in trying to move forward with, with legislating any material regulatory overhauls, given how the narrow balance of power in Congress already. I think this really just has bigger implications for the fiscal outlook in particular. Now, there are some places where the two parties could cooperate. Probably not on regulatory measures, but certainly things like some of the protection of domestic industries, China, et cetera. I mean, there are some places for cooperation.
Yeah. So let's talk about your outlook, because I'm reading your latest notes, and you're saying you expect a contraction of roughly 1% of real GDP that lasts 8 months. So that doesn't sound like a soft landing to me at all.
No. We, for most of the past year, have been forecasting some version of a soft landing. We had relatively weak growth with higher interest rates. But at this point, with the Fed continuing to raise rates, demonstrating a lot of resolve in their rhetoric to continue to raise rates and restore price stability, we fully moved our economic projections to be a hard landing. And we're now expecting, really starting in Q2 of next year, to see not what historically would be a large economic contraction, but what would certainly, look like a recession, kind of run-of-the-mill recession in the U.S. There are a lot of imbalances that are still remaining in the U.S. economy from the pandemic. Goods spending remains very elevated. We're seeing households spend down their excess savings at a very rapid rate. House prices are very stretched relative to incomes and have started to correct. So seeing all of this unfold over the last few months, we've decided that, really something's got to give in the U.S. economy. And piling higher interest rates on top of that now looks to us like it's going to lead to an economic contraction next year.